Good afternoon. Welcome to today's event, Detailed Preparation of the Incurred Cost Proposal, Part 1, General and Job Cost Ledger Related Schedules with Robert Jones. We're so happy to have everyone here today. My name is Jenny Digatani. I'm with Left Brain Professionals, and it's a pleasure to be your host today. There are just a few housekeeping notes that I'd like to highlight to help you get to the most out of today's program. In-course webinars are interactive, and we love to hear your questions and comments. So please use the GoToWebinar questions box to interact with us during the program today. To get started, let us know where you're from so we can give you a warm welcome in the box. You can download the handouts from the GoToWebinar control panel and also from your In-course dashboard. Today's webinar is 1.5 hours, and we will launch 7 polling questions. To earn CPE credit, you will want to respond to at least 5 of the 7 polls. However, we love when you respond to all of them. You'll be able to access your CPE certificate from your In-course dashboard 1 hour after the program concludes. You can download your CPE certificate or store it safely on your dashboard. Think of In-course as your dashboard, as your CPE cloud. If you have any questions about the handouts, CPE credit, or your In-course dashboard, you can email us at support@incourse.com. Today, we're joined by award-winning speaker Robert Jones. Robert is a government contracts and accounting expert and the president and CEO of Left Brain Professionals. Robert is a recurring presenter and speaker with In-course, and we're so excited to have him back here today. Robert, I'll turn things over to you now.
All right, well, good afternoon, good morning to some of you who are on the West Coast like me. Thank you for joining us. Here today, we're going to talk about the detailed preparation of the incurred cost proposal. And I do want to take a couple of moments here and kind of set the stage for kind of where we've been in our series and what the next 2 webinars include. So those of you that have been with us for a little while, we delivered a webinar back in December on the incurred cost proposal. And it was a higher level. We kind of talked about the incurred cost proposal overall. We talked about some of the requirements for it. We talked about some of the audit aspects and some other things. And we chatted a little bit about the schedules, but we really didn't get a deep dive. And so what we've decided to do here in March and again next month in April is we've taken the actual file itself, we've broken it down into 2 parts, and we're going to go, excuse me, tab by tab, or basically schedule by schedule through the entire incurred cost proposal, kind of talking about what's included in there, some of the pitfalls, what to look for, and how all of this works. So just want to make sure that you understand what you're here for today. All right, again, my name is Robert Jones. The firm is Left Brain Professionals. For those of you that maybe haven't joined us before, I describe us as a boutique accounting firm in that we work only with government contractors. Tell people that we live, eat, and breathe the FAR and CAS on a daily basis. We practice primarily accounting system design, implementation, and audit support. Some of the types of tasks that we get involved with are helping clients achieve an adequate or approved accounting system. A lot of work with DCAA audits, the incurred cost proposal, and indirect rates. A couple of my other colleagues that you see there, Melissa and Steve, in addition to Jenny, who's helping me on today's webinar. And with that, our learning objectives for today. At the end of today's presentation, you should be able to describe the goal of completing the general ledger schedules, list the supporting documents necessary to complete the ICP or the incurred cost proposal. There for a moment, I'll pause and say, you'll hear people refer to this as the incurred cost submission or the ICS. We call it the incurred cost proposal or the ICP. If you go to DCAA's website, you'll see something called the incurred cost electronic or the ICE. It's all the same thing. It's just some different terminology that you will see around this. Again, at the end of today's presentation, you should be able to explain the purpose of the job-related schedules and list 5 Excel tips and functions to aid in success. With that, we'd like to kick off with a poll to kind of gauge where everybody is as we start today's presentation.
Our first polling question today: what is your level of knowledge on job cost ledger related schedules and the ICP? A, what is the job cost ledger related schedule? B, I'm unsure how the job cost ledger related schedules correlate to the ICP. C, I'm fairly knowledgeable on both. Or D, I'm an expert. Give everybody just a few more seconds to answer that first question. Go ahead and close that out.
All right, so it looks like we have a 1% expert out there, so please call me, send me your resume. I'm probably ready to hire you. If you know how to handle this stuff, that's great. Everybody else is somewhere in the middle, and that's okay. Obviously, at the end of today's presentation, we're hoping that if you are in category A or B, that you move up at least a notch. We probably won't get any experts by the end of today because you kind of have to do a few of these to get there. But we kind of know where everybody is now as we get started. All right, let's dive in. And again, this is a deep dive. We're literally going schedule by schedule. I've got some screenshots to show you and walk you through. The other thing that I will tell you is that the screenshots you see today are from our template for the incurred cost proposal. If you would like to download our template, it is available on our website, leftbrainpro.com. In the top menu, you'll see a tools button. Click on tools and you can go down and get the incurred cost proposal. We have a number of other tools out there. DCAA also has a template that's available from their website. I'm not a fan of theirs. I found a number of errors in it. It's a little more clunky, a little more difficult to use. They also have macros built into it, and some people struggle with macros. So ours is stripped free of all the macros. Regardless of which template that you use, and maybe somebody else has got another template out there, the thing that I would tell you to remember is that these are templates. The template that we're going to go through today, for example, is built for 3 overheads and a G&A that is total cost input, or TCI. If you have a different number of overheads, let's say, for example, maybe you have a material and subcontract handling pool. In that case, you have a G&A that is value-added base. Then there need to be some changes made to the template. So again, just keep that in mind. These are templates, and they will almost always have to be modified to some extent to meet your specific needs. All right, the first thing that we're going to talk about are the purpose of the general ledger schedules. And we're going to start with the fringe pool. I'll also say that when we go through here, you're going to see these schedules are identified as Schedule A, and they go out to Schedule O, and then there are some additional schedules and stuff. I don't do them in the order of A, B, C, D, and the primary reason for that is that the structure of the workbook doesn't match the way we typically do rates, right? So again, those of you that have been with us for a while that have otherwise dealt with indirect rates and incurred cost proposal, we typically calculate the fringe rate first because fringe flows into overhead and G&A, and then we calculate overhead because it flows into part of the G&A pool and part of the G&A base. So that's the way I present it in here. That is not the order in which you will find the tabs in the template. And a quick reminder, here for the fringe pool, these are the costs to maintain our W-2 employees. If you need a deeper reminder on what the pools are and what the proper allocation methods are, last year on Incorsa, we did do a couple of webinars. We did a fundamentals and an advanced indirect rates. Both of those are available for self-study, and so you can access those through Incorsa. Our fringe pool, again, the cost to maintain W-2 employees includes things like employer taxes, health insurance, retirement, and paid absences. The fringe pool, our tab in the workbook looks like this. You'll see that most of these tabs or schedules look very similar. I'll spend a little more time on the first one, kind of walking through the columns and the information that's here. Pretty straightforward in that you'll want to obviously copy and paste in your account number, description, and the general ledger there is going to be your balance from the general ledger. One of the other things that you can do, and I'll reference it a couple of other times in today's webinar, we highly recommend that you take your trial balance and add it as a separate tab in the workbook, and then use formulas For example, you could use the X lookup formula, which we'll talk about during our Excel section today. You could use the X lookup formula to populate these other tabs from the single tab where your trial balance is. One of the advantages of that, we often find that as you go through preparing this, we find errors, or we find something where, hey, we're going to go make a journal entry in the general ledger to fix something. The other thing that sometimes happens is maybe you'll be starting to work on this now, and you're still waiting for the tax CPAs to do their work, right, and send you maybe some adjusting journal entries at the end of the year that may affect these rates. The nice thing about putting the trial balance into a single separate tab and then using reference formulas to get the information is that then you can simply update the trial balance in that one tab, and your numbers will flow automatically throughout the rest of the workbook. You don't have to worry about remembering that, you know, direct labor is on this tab and this tab and this tab. You put it in one place, it flows automatically to all the places where it needs to be. And also during the Excel section, we're going to talk about named ranges and tables and some other tools that can help you with that process. But again, the tab here is our Fringe. Again, whether you paste it in or whether you use a formula to get it, basic information from the general ledger. You notice there's an adjustment column. You're going to see an adjustment column on many of the schedules that we talk about today. This is where you will make adjustments for things like PPP forgiveness, right? So those of you that were with us last month, or if you missed last month, I highly recommend go back, pick up the PPP forgiveness webinar. We also have a podcast, we have an article, we have a blog post out there. If you need information on that, please contact us, we can get you that info. The PPP forgiveness is tricky. It's even more tricky for government contractors. And in fact, I just got off a call right before this webinar with a client who had a PPP loan last year, received forgiveness. They applied for a second round of loans this year. They're in the middle of their 24-week period right now. And so they're going to have another forgiveness that they're applying for this year. And there's a lot of strategy in how, from an indirect rates perspective, there's a lot of strategy in how you apply for forgiveness and how you allocate those dollars to the appropriate pools. It can have a significant impact on the rates, and we want to make sure that you get it right. So again, either go back and pick up that information, or send us an email, and we can walk you through that. But again, those kinds of adjustments would be made here. Other common adjustments that are often made are for things like unallowable costs. So if your general ledger is set up that you capture unallowable costs within the pool and then segregate it later, that's okay. The way that you would do that is you would put the adjustment amount in here, and then you see there's a note column. You would put a note over there like a 1, 2, 3, 4, and at the bottom of the page, there's a spot where you identify what those notes are. In the case of unallowable costs, it's pretty simple, and usually just saying, note number 1 is unallowable cost, don't have to do much. In the case of PPP forgiveness, there's a lot of work building those schedules out separately for your PPP forgiveness application and how you're going to apply that forgiveness to the indirect rates. We also have to remember that there's the employee retention credit and some other tax credits out there for paid sick leave, that if you participated in any of those, all of those kinds of credits or forgiveness are treated essentially the same way, and we have to give that credit back to the government. The way we do that is through the adjustment column here and the rates. In that situation, you're going to want a very detailed set of notes. So you don't want to just say, oh, PPP forgiveness. In fact, what you're going to want, what we've recommended to people, is to have a separate worksheet where you show what you applied for forgiveness, what that amount is, and how you apply that forgiveness to the various pools, right? So if you used a part of that forgiveness for overhead labor, some for G&A labor, some for IRAD labor, maybe you used part of it for rent, part of it for utilities, whatever that was, you're going to have to apply that forgiveness back into your rates the exact same way that you applied for forgiveness to the federal government as part of the program. So, what I would do is put the adjustment in here. I'd put a note like maybe a number 2, as an example for PPP forgiveness. At the bottom, I would say, PPP forgiveness, see attached worksheet, and make sure that it's very clear that somebody can say, oh, you made a $200,000 adjustment here. That $200,000 adjustment is clearly identifiable in this other worksheet, so I know where those dollars came from and why you made the adjustment. You'll also see there's a reference column. Some of the worksheets pull in information from other tabs. As we work throughout the workbook, we often are referring back to another tab to bring information in. In that case, you'll see some reference information in there. For this schedule, we just have all of our expenses and a total fringe pool that you see at the bottom. The fringe base, as a reminder, is total W-2 labor. That means all of my direct labor, overhead labor, G&A labor, unallowable labor. I also need to put on this tab, I forgot to put here in the slide, it also includes our BMP and IRAD labor. Again, all W-2 labor is in the fringe base. And then my fringe base in the workbook looks like this here. So in this case, again, remember the template that we're using and walking you through has 3 overhead pools. That means I've got, I could have like a manufacturing and engineering and, some other kind of services, maybe an installation division. So maybe that's what my 3 overheads are. So my direct labor as a base of those is I'd have direct engineering labor, direct manufacturing labor, direct installation labor, potentially as a way that I have this broken out. So that's why you see all of these accounts broken out that way in the pool here, or in the base, I'm sorry, of fringe. Again, we've just generically called them overhead 1, 2, and 3, whatever those are for you. You'll also notice that there is indirect BMP and IRAD labor associated with each of those overheads because, again, the people in those pools are the ones that would be doing that work. The BMP and IRAD labor flow a different spot when it comes to calculating our BMP and IRAD rates, and you'll see that when we get to the G&A schedule. But that labor is otherwise associated with those employees in that department, right? So if I go back to my example of having a manufacturing and engineering and an installation divisions or operating sections of the company, when I'm doing IRAD work, I probably have people from each of those 3 areas doing that kind of work, and those rates need to flow through appropriately. What we've done as well at the bottom, because we do have multiple overhead pools, there are other places in the schedule that I simply need to see the total indirect labor. I need to see the total IRAD, the total BMP, and so we use some formulas at the bottom of the schedule there to summarize that information from up above. Our next schedule that we're going to talk about is overhead, and this is on Schedule C. You'll notice when I talked about fringe, it didn't have a schedule identification. It's just called the fringe tab or the fringe schedule in the workbook. Some of the others will say Schedule A, Schedule B, etc. Schedule C is overhead. In this case, where we have multiple overheads, then I would have multiple Schedule C tabs in my workbook. Reminder that overhead are those costs to support all or many customers, projects, jobs, services, whatever your structure is in your business. These are costs that are not easily attributable to a single final cost objective, such as a project or a service. Excuse me, my allergies have been acting up the last couple of days. There's something blooming here in California that is new to my body. So Schedule C, again, is those costs to support all customer projects or services. Includes things like general support, what we call idle time. Again, a reminder that idle time is not people sitting around twiddling their thumbs, but it's that non-billable time for those employees that are otherwise direct employees. That may include things like training, meetings, maybe some other work that you have them do. When we talk about the manufacturing environment, I say, sometimes we take a Friday afternoon and we clean out the tool crib, or we reorganize the inventory, or we prep machines for the next week. That kind of work is not directly attributable to a customer job or to something that we're making, but it goes into overhead, and so that goes into, again, what we call idle time. I already mentioned training as an example. Any kind of manufacturing or service supplies. Our facilities expenses typically go into overhead. So some of you out there may have a separate facilities pool, and that's okay. You just need to build that out appropriately. Essentially, you could create like another overhead tab and it'd just be a facilities pool. but you would create a separate worksheet to calculate your facilities if you're doing that separately. We see some people put their facilities cost into G&A. You're typically artificially increasing your G&A at that point by putting all the costs there, when we know many of those costs from a facilities perspective, again, are to support the operations of the business, supporting the customer and client work that we do, not necessarily supporting us running the business behind the scenes. Now, you might take another potential is that you might automatically allocate a portion of your G&A or a portion of your facilities costs between overhead and G&A. And if you do that, that's okay, and you'll have some facilities expenses in overhead and some facilities expenses in G&A, whether or not you have a separate facilities pool. We typically see a facilities pool and that separate substructure for companies that have multiple overheads, multiple operating divisions or departments, and they want to make sure that they get a fair allocation of those expenses into each of those places. And we also are going to have applied fringe, and you're going to see this applied fringe in other places. Remember that mathematically, when we are calculating fringe, or when we calculate our fringe rate, we are applying the fringe expenses to all types of labor. And since my overhead pool has overhead labor, I have to have the appropriate amount of applied fringe that comes in with that as well. The schedule in the Excel workbook looks very similar, right? So again, whether I copy and paste the information in or I use a formula, I got to get my basic information in from the general ledger. I make any appropriate adjustments. If I'm making adjustments, I'm going to use my notes column. And if I'm pulling in data from another tab somewhere, then I would use my reference. And in fact, here you see that I have a subtotal of all of my pool expenses. Then I have applied fringe. Notice that my reference there is the fringe, is going to be the fringe tab, right? That makes sense. We calculated fringe somewhere else. I'm applying fringe in here. I'm going to refer somebody back to the fringe tab if they want to see how I did that calculation. And now I have a total overhead pool. I have my subtotal, I have my applied fringe, and now I have a total overhead pool. The overhead base for many companies, especially those of you that are service-oriented companies, is direct labor plus applied fringe. And it also includes all of our direct type labor, such as BMP and IRAD. Again, there's a deeper conversation in that's a little more than what we can cover today, but just to remember that BMP and IRAD are always treated as if they were direct. And so since we have direct labor in the base of overhead, then my BMP and IRAD labor are also in the base of overhead. And I would have my applied fringe. Remember that I said that because we allocated fringe over all labor, then anywhere else in my other calculations, whether it's a pool or a base, if I've got labor in that part of the calculation, then I also have the appropriate applied fringe in that same part of the calculation. Overhead could include materials in a manufacturing or assembly environment. It really just depends on what your setup is. And if you're in one of those environments, I recommend that you talk to us or talk to somebody that knows what they're doing from setting up and calculating rates so that you do that correctly and it flows through correctly into the rest of your rates. With that, Jenny, a quick polling question, please.
This is our second polling question today. Which is not a cost to maintain W-2 employees? A, employer tax, B, health insurance, C, dependent care, or D, retirement? Another second on this one. I'm going to go ahead and close it out.
All right, so which is not a cost to maintain W-2 employees? The correct answer is C, Charlie, dependent care. Right, that is not one of the things that we mentioned. We talked about employer taxes, health insurance, and retirement are cost to maintain W-2 employees. So dependent care is not a cost to maintain W-2 employees. Now, I guess what I'll pause there, because and when we've talked about this before with some others, I think some people get a little bit confused about that. Some of you may offer an FSA, right, a flexible spending account. Some companies we know will fund all or a portion of that FSA as part of their benefits package. And if you do that, it would still be part of the benefits pool. I'm sorry, part of the fringe pool. And because the FSA could be used for dependent care, by default, it's coming in there, but dependent care itself is not something that we typically would consider otherwise a fringe expense. Again, the only way that that would come in would be if you were offering an FSA or a flexible spending account. And if you, as the employer, were funding a portion, all or a portion of that FSA, I would just have an FSA expense listed in my general ledger. We do see some companies doing more of that, especially with a lot of the high deductible health plans. They're trying to manage healthcare costs. Employers are often now taking on those high deductible plans. And what they're doing is that they are funding, again, all or a portion of either an HSA and or an FSA. And obviously you want to talk to the appropriate people about how to do that. But that is one of the structures, one of the strategies, I should say, that we do see many more employers doing. Continuing on with our overhead conversation though, our overhead base before the quiz we talked about was my direct type labor plus applied fringe. So you see here our bases of most of the pools are calculated on Schedule E. And so here I have my overhead pool. That number is going to come over automatically from the total on my previous tab. My overhead base is listed there with my direct type laborers and my applied fringe. And then it's going to give me my overhead rate. And you'll notice that Summary Schedule H is my reference. We're going to talk about Schedule H and Summary Schedule H in a little bit for the base. And then my reference for my overhead pool is my Schedule C, right? So here I'm talking about overhead 1. So it would be Schedule C version 1, right? In this case, if you open up this full workbook, you'll see Schedule C1, C2, C3 for each of the overheads. Continuing on, Schedule B, our G&A pool. Reminder that G&A are those costs to operating the business as a whole. Reminder that overhead is the cost to support customers or clients, contracts or projects. G&A is the cost to run the business as a whole. It includes things like accounting, HR, business development, IT, and legal. And again, I could also have insurance and taxes. And again, my applied fringe, because I've got labor of G&A type in some mix of that, then my applied fringe also needs to come through and become part of the pool. The other thing that's included in my pool, and you'll see this when we go through the calculation on the screen in a little bit, my BMP and IRAD are also part of the G&A pool. They're treated as if they're direct. They actually get a portion of overhead assigned to them, but they are part of the G&A pool. So my main pool, again, the tab looks the same as all the others. I'm not going to go into detail on this portion. This is where I would have my main expenses. I have my applied fringe, right? Because again, I'm going to have some G&A labor, so I've got applied fringe. It still takes me down to my second subtotal, right? So I've got a subtotal at the top, I've got applied fringe, and now I have a second subtotal, not a total yet, because I have to add in my IRAD and BMP. So when I look at the bottom half of this tab, I see that I have my IRAD material labor. I have my IRAD fringe. That's going to be my IRAD applied fringe and my IRAD applied overhead. Same thing for BMP. This is an area that many people get the calculations wrong. We know it, the auditors know it, and this is an area that they're always going to check to make sure that you have the proper treatment of IRAD and BMP expenses in your rates. Now, I will tell you at the end of the day, for most companies, unless you happen to have a significant amount of either IRAD or BMP, it doesn't really affect the rates that much. But again, it's an area that we know, the auditors know, people get it wrong. And what the auditors are looking for, hey, if I find an error here and I can shave off a fraction of a percent, and I find another error here and another error here and another error here, all of a sudden those fractions of percents add up to 2, 3, 4% or more sometimes. And again, typically, it's not going to be in your favor. So those are percentages that are eating into your profit margin with those errors, and with what the government is going to allow you to have as correct allowable reimbursable rates. So double check that you're doing the IRAD and BP correctly. It affects both the G&A pool and the G&A base, which we'll see in just a moment. The other thing that I would tell you, one of the other tools on our website is an indirect rate calculator. If you have not previously downloaded that, I highly recommend that you do that. One, it'll allow you to work from a budgeting perspective or otherwise calculate what your rates are. I always like to do it side by side with the incurred cost proposal. It's a great way for me to double check everything and make sure that the numbers come out. So the indirect rate calculator is designed for you to just plug in top level numbers. You're not getting into all of the detail that we have to do in the incurred cost proposal. So if you've got a good trial balance and your cost pools and everything are structured appropriately, then completing the indirect rate calculator tool usually can be a few minutes. So you can kind of plug in those numbers, you see what your rates are. The incurred cost proposal is much more detailed, as we're seeing here. There's a lot more work. But then what I can do is I can enter my fringe stuff, and then I look at my fringe rate in my indirect rate calculator, and I check that out as I go along. Am I in line? And I should have said that earlier. That's one of the things that I recommend that you do is double check stuff within each schedule as you work along. It's much easier to find an error within the schedule that you just did instead of trying to complete the entire workbook, get to the end, run your rate calculator, and again, maybe the other thing that you would do is if you are already calculating your own rates, if you're using a system like Uninet or Dynamics 365 or something else that has government indirect rates in there, and you've got an indirect rate report, obviously print that out and do a comparison side by side as well. But it's much easier to do those comparisons and look for any errors on a schedule by schedule basis, because if you wait until the end and something is off, then you're digging through and trying to figure out where the problem is. And I always recommend as well starting from the fringe, because we build up from fringe. So build your fringe pool, compare it to your general ledger. Does it match? Fill out the rest of it. Now compare your fringe rate. Does it match what you have on your reports, or does it match our indirect rate calculator? Do the same thing as you go through overhead and G&A. So again, a little tricky here with the proper treatment of BMP and IRAD. We're still in the G&A pool. Then when we go to the G&A base, our focus here and our current template is built on a total cost input. That's what many companies use. If you're using something else, if you're using the value added approach, you will have to make an adjustment. And I always say, even though it's called total cost input, I kind of put an asterisk up there and say it's most other costs. There are certain unallowable costs come out of there, and the proper treatment of the overhead as it relates to BMP and IRAD. So typically, again, G&A base would include all overhead, except in this case, we have some BMP and IRAD expenses in the pool. And because of that, a portion of our overhead expenses are now going into the overhead pool. That means that those same expenses cannot be in the base, right? I cannot use the same dollars in both the pool and the base. They go one place or the other. And since I have a portion of my overhead expenses that went to the G&A pool associated with BMP and IRAD, then that amount that went into the pool has to come out of the base of G&A where the rest of my overhead is flowing in. And there are a couple of ways to do it. Some people present it as all the G&A in the base, and then they back out the amounts that were put into the G&A pool. I typically like to take the approach of put the stuff into the overhead pool, and then I apply my overhead rate to my other direct expenses that are already in the base, and then I'm only applying in a number, I'm not subtracting out a number. Might sound a little confusing, and I know you might not follow me, so I'll say it again really quickly. Again, for the base, you have to remove out the portion of BMP, the portion of overhead that was applied to BMP and IRAD in the G&A pool. You can either take the entire overhead pool and put it in the base of G&A and then back it out, or you can simply calculate what the applied overhead would be on your direct expenses. I like the latter because to me it's cleaner and more straightforward and easier to follow. Another polling question, please, Jenny.
This is our third polling question today. Which is considered a cost of operating the business? A, business development, B, accounting, C, HR, or D, all the above?
And I'm going to jump on a question that I see popped up here. Somebody said on Schedule B, are we applying Fringe to the list of items from accounting to licenses? I'm trying to understand the flow. Remember, Fringe only gets applied to labor. And so our Fringe, our G&A pool includes those other items, but it also includes some type of G&A labor, right? We've got accountants or IT people or HR people, right, that are our employees. And so we're going to have G&A labor in the G&A pool. And so I'm going to apply the appropriate amount of Fringe associated with that G&A labor. And with the polling question here, then you can go ahead and close it down. It looks like almost everybody got it right, which is considered a cost of operating the business. Really kind of a tricky question. The answer is D, delta, all of the above. Remember, we said that business development, accounting, and HR are all expenses of running the business and therefore would be part of the G&A pool. Okay, carrying on, now we're going to talk about job-related schedules. Everything that we just covered were all the general ledger schedules. So we talked about Fringe, which is again just called the Fringe schedule. We talked about overhead, which is Schedule C, and we talked about G&A, which is Schedule B as in Bravo. Now we're going to talk about some of the job-related schedules. So the primary one that you're going to work on is Schedule H, and it is a big schedule. It's kind of a monster. I didn't even try to put all of it on the screen. If you download the template and you open it up, you're going to see that it's got columns all the way out into like AA, AB. It can be even more depending on how, again, how your overhead and everything is structured. The primary stuff that you're going to enter here and what you're looking for, this is where you need to have a job cost report that summarizes your direct cost elements by contract, okay? Ideally, you have this in a system that will spit it out in an Excel format. I just need one line per contract or per project job that you have, and I need a summary of direct labor, travel, materials, ODCs, and subcontracts. And then I also need that by job type. So if you look at the schedule here, you'll see that we've got sections of the schedule for cost type, flexibly priced contracts, T&M, fixed price, and commercial. Now your commercial can be a single line item. You don't have to break that out because the government's not looking at that. That can be, and in fact, what we typically do for many clients is we just take the job cost report for all the government stuff, and then we just summarize everything else into the one line item for commercial, okay? But again, you do need reports that give you your summary by cost element, and our primary cost elements for direct costs are labor, material, travel, ODCs, and subcontractors. And it needs to be able to do that. You need to be able to identify those projects by the type of contract, again, whether it's a cost type contract, T&M, or fixed price. This can get a little tricky if you have a hybrid contract where some of your CLINs, for example, might be fixed price and some are T&M or some are cost type. You're going to have to report those as separate line items on the contract. So that, for example, if you had one that was split between fixed price work and T&M work, and you had multiple CLINs, then the CLINs that were fixed price would be reported under that section, and the CLINs that are T&M would be reported under that section. That's in the case where you have a hybrid contract. It's also one of the reasons I don't care for hybrid contracts, because it makes tracking and reporting of that information difficult. I think there was something else. Oh, the other thing that you will need here on this schedule is you will also need the prime contract number and or the subcontract number. So if you're the prime, you're just going to have, the one prime contract number. If you're the sub, you're going to have your internal project number. You're going to have the subcontract number, right, that was assigned to you by your prime. And then you're going to have the prime's contract number, because we do have to be able to report all of this information to the government up through the prime contract number. The second half of my Schedule H, so what I just showed you on the previous screen would be the kind of the left half of the tab, or the left half of the schedule. That's again where you're entering the prime, where you're entering the cost elements, the summarized cost elements by contract. The second half, or the right half of the schedule, is where there's formulas in here that are going to bring in the fringe, overhead, and G&A rates that you calculated on the other schedules, and it's going to flow that through automatically. So again, one of the nice things here is because it's all built on formulas, if you make a change, let's say you take my advice and you create a tab for your trial balance, and then you use some formulas to populate the other tabs to calculate your indirect rates. And now you've got formulas here that are applying those rates to the individual jobs so that I can see my total cost incurred by job. Then if you make a change to the trial balance, you can see that it's going to flow through automatically to the rest of the workbook, and you don't have to worry about trying to figure out where else you need to make those changes. So this right half, or the second half of the Schedule H, is all formulas. You don't have to do anything here. The workbook is going to do all of the work for you. At the bottom of the schedule are my IRAD and BMP. Remember we said that IRAD and BMP are treated as if they're direct. So the top and the biggest portion of your Schedule H is all of your direct projects. You've got one line item for your commercial work, and then you're going to have one line item each for BMP and IRAD. Now, let me pause here and say that when we talk about how BMP and IRAD are actually structured in your system, might be different than how you present them, but you can present them as a single IRAD line and a single BMP line. You could break them out if you wanted to. There's certainly nothing wrong with that, but they could be presented as a single line item. Now let's talk about how they would be structured in your system. Your BMP, our recommendation is that you have a BMP project by year with a task for each proposal. A reminder that BMP, or bid and proposal, are what we call the pen to paper. That's where we're actually putting together a proposal in response to an RFP. So BMP is not BMP is not business development. It's not knocking on doors. It's not trade shows. It's none of that stuff. It is pen to paper, writing the proposal as a response to an RFP. We recommend that you have a separate BMP task for each proposal so that it's easier for you to identify, hey, we've got multiple proposals that we're working on or that we have worked on throughout the year, and I can see now how much effort I put into each proposal and what the result of that contract was. And that's going to be for companies as you grow, that's an interesting KPI to track, because then it's going to give you a sense that as you grow and you say, hey, wait a minute, there's an opportunity for a $10 million contract. Or, hey, wait a minute, there's an opportunity for a $100 million contract. And you want to get a sense of, well, how much effort, right? How much time and money are we going to have to put in to a proposal to go after such a big contract? If you track this, then you'll have that information and you can see, oh, on average across the enterprise, our BMP rate, for example, might be 1%, might be 1.75% or something like that. So you can see, you would be able to see, okay, I'm going to go after, a $10 million contract. Okay, if I've got a 1% BMP rate on average, then it's going to cost me $100,000 again on average to be able to put together that proposal. And that, you might stop and say, wow, $100,000 to put together a proposal. But again, a $10 million contract, can be a lot of work. There can be a lot of, you've got internal people that are estimating stuff. You've got engineers, you've got manufacturing people that are in there looking at it. Obviously, you're going to have your senior review team. The accounting and finance people are checking numbers and doing stuff. They would all charge their time to that BMP effort so that you'd be able to track that and then know, again, as you're looking at other opportunities, what that rate is. And then the IRAD, our recommendation is you actually have a separate IRAD project for each IRAD opportunity that you're chasing. That way it's very clear from a development perspective what time and dollars and expenses went into that. We also recommend that you have a charter for each IRAD project or job. So let's say, for example, you're going to try to develop anti-gravity paint. That's my favorite one I always go back to. You're going to try to develop anti-gravity paint and you're going to put some people on an IRAD project. You need to put together, like, it doesn't have to be long, it could be like a one-page charter, but you're going to describe what it is that you're trying to do and what the outcome, what's the desired outcome. And then you're going to track that effort separately. And it's really important because, let's say you do discover how to make, anti-gravity paint, or more than likely, right, we often learn other things while we're trying to solve a problem. If you develop some kind of technology, now you've developed that at private expense. Even though it's included in your rates, it's considered at private expense because it was not a billable contract for the government. You now can claim that going forward, right, and say that you developed this at private expense, and you've got records to show, hey, we set out to develop this. This is what we learned, and these are the expenses, and we can show that we actually segregated that from all of our other stuff. So it's really, really critical that you have separate projects for your IRAD work. All right, carrying on with Schedule H. So what we just talked about was the individual contracts, right? We're going to put all that information. Now we've got a summary Schedule H, and it's what it sounds like, right? It's summarizing all that information. So it's summarizing my direct costs across all of those overheads, across all jobs. It's summarizing all of my IRAD, BMP labor, pulling all of that summary information in here. And then, oops. Yeah, I think that's everything, yep, that I wanted to cover on here. So that's just my summary information from Schedule H. My next job-related schedule is the Schedule G, and this is where I reconcile my general ledger to Schedule H, or where I'm reconciling my schedule, or reconciling my general ledger to the job cost ledger. Again, those of you that have been with us for a while, you've heard me talk about that. We actually did a webinar last year specifically on job costing. Really, really critical that you reconcile your job cost ledger to the general ledger on a regular basis. We recommend doing it monthly. Just like your accounts receivable, accounts payable, or other accounts where you have a sub-ledger that supports that and you do a reconciliation, you should treat your direct expenses, right? So if in your general ledger, if you've got direct labor, direct materials, et cetera, like you would have on your job cost report, then you should be able to run a job cost ledger, job costing report, and it should summarize and tie back to the general ledger, right? The sum of the parts should equal the whole. And this is where you're going to do it in the incurred cost proposal. But because you're doing it here and you're going to have to, identify why there are variances and explain those variances, that's why we recommend reconciling that on a monthly basis. Much easier to find those errors and fix them within a single month than to get, maybe a few months after the close of the year, and now you're trying to figure out what happened last February or March or something like that. So again, this is the reconciliation of my job cost ledger or Schedule H to my general ledger. I also have, as part of the Schedule G, I break out and I show what the government's participation is by contract type in each of my overheads and my G&A. So the government wants to see, of overhead one, how much of that was on these different contract types and your commercial or IRAD and BMP. And all of this information flows through automatically from, so all of this tab here is all formulas, and all of this is going to flow through automatically from Schedule H. You shouldn't have to do anything on this tab. The next schedule for job-related items is Schedule I. This is what I refer to as the ultimate reconciliation. Again, those of you who've been around me for a while, I talk about the incurred cost proposal as a whole really being the ultimate reconciliation, because at the end of the day, at the end of the year, what the government wants to know is, what were your total costs incurred, what did you bill me, and what's the difference, right? Is there a reason that you significantly underbilled or significantly overbilled the government? Schedule I, important thing to note here, this is inception to date information. So it's going to pull through. For example, you'll see this kind of pinkish shaded cells. That's going to pull information from Schedule H for the current year, but it does not have the inception to date. So we do have to pull in previous year stuff. So this is where you're going to need to make sure that you've got previous year's incurred cost proposals, so you can have that information. And again, it's by contract. So this year, I'm going to include on here my inception to date costs by contract. Then I'm going to enter my inception to date billing by that contract, and I'm going to see how much am I over or under. Now, in fact, you're going to see that there are going to be variances, and for the most part, that's okay, right? You proposed profit, so we expect, and hopefully, right? Hopefully, you did this good, and we hope that there is a positive variance that you made a profit on the contract. Now, what's going to stand out, and one of the things that we do, we don't put it in here for the submission, but as we're working with the client to help review this, we add another column in here, and we actually calculate what the percentage of the profit was on that. And there are a couple of reasons for that. One, it lets the client easily see that if they're not otherwise tracking that. And we find that sometimes clients don't have good job cost reporting information. So this is one way to get there. Not the best, but it is one of the ways to get there. So they can see what that profitability is overall on a job. But it also, because we could then look at it by contract type, right? And so, for example, when I'm looking at cost type contracts, most of those in the government world, most people are, bidding those at around 8 to 10%. There are some exceptions in both directions, but typically we see most of the cost type work in the government world around 8 to 10%. So if I look through here and I do my extra little column over to the side, again, it's kind of my sanity check column. If I know that on average I was bidding 10% and I see a bunch of 5 and 6%, then that tells me there's a problem, right? That tells me I've underbilled the government. Yeah, I'm making money, but if I bid 10% and I'm only realizing 5 or 6%, then there's something wrong, right? And mostly usually what we find is that the billing rates that were used were wrong. That's where the incurred cost proposal can help you. Again, you're evaluating what your actual rates were to what you proposed and what your billing rates were. If it's high, so we've also seen situations where we did this and all of a sudden, the client, there was 18 and 20% of profit on some cost type contracts, and we tried to figure out what that was. And when we did, what we discovered is that, there were some things that were charged to the wrong contract, right? So it gave them the ability to go back and look at some specific contract on a contract by contract basis and try to figure out what that problem was. So that's just another little trick. Again, it's not something that you would submit, but what I do is just put another little column over there and I put a formula in and I calculate what my different, as a percentage, because it's going to give me my dollars, I calculate what my percentage is, and then I can see that profitability. Similar thing on T&M, and though again, typically on T&M, you should be, and hopefully you are proposing higher profit on those. But again, if on average, let's say you're typically proposing, let's say 15% profit on your T&M stuff, when you do the individuals, you can kind of see what's going on. And you can also get a total, right? So you can have it not individually, but you can also have it at a total and say across the board on all contract types, we averaged, 8.75%, and we typically bid 9. Well, that's good, right? That tells me, we're typically on target. I may have some individual contracts that are off one way or the other, but I can see that overall we're kind of on target. So that's what this schedule is. Again, this is that ultimate reconciliation. This is where you're going to determine, I always use the words significantly because nobody hits the target dead on. This is where you're going to figure out, have you significantly underbilled or significantly overbilled the government? And to quickly talk about those, if you significantly underbilled the government, the problem for you as a contractor is that there simply may not be any money left for the government to pay you. So they can, the auditors will look at this and they'll say, yep, those rates are correct. And yep, you underbilled the government. And yes, you have a claim and you can submit an invoice. Unfortunately, the contracting officer might say, yeah, you got a legitimate invoice, but the program is over and I don't have any money left, right? And so that's not a good situation for you to be in, because now the government owes you money and they don't have any way to pay you that money. You don't want to be in a situation that you've significantly overbilled the government, because guess what? They come, contracting officer is going to send you a demand letter, and we've seen this. They're going to send you a demand letter. They basically got their hand out and they're saying, you know, you overcharged us. Now we want our money back. And oh, by the way, they want their money back with interest. And if it's determined through the audit, if there were intentional or other errors, then some of those, there can be penalties and interest as well. So you can end up in a situation where not only do you owe them money because of the difference in rates, but you also have penalties, and you would have interest on all of it, the overpayment and the penalties. And that can be very costly. We've seen some clients go through this, relatively small clients, who sometimes end up with tens and hundreds of thousands of dollars because, again, they didn't pay attention to the rates, they weren't monitoring them, they didn't calculate them correctly. They ended up in a situation where they overbilled the government to the tunes of tens or hundreds of thousands of dollars. And the problem there is that most small businesses simply don't have it, you know, they don't have that cash available. And it's not fraud, it's not that they were doing anything wrong, but you know, they billed the government, they got cash in hand, and what do? Right? We spend the cash. Not necessarily fraud, but when we get cash in our businesses, what do? Right? We've got other projects, we've got, you know, internal things, we're investing in infrastructure, we're buying computers. Oh, wait a minute, we kicked off another $2 million project over here, and I can't bill that for 60 days, but I got to pay my employees and pay my vendors in the process, right? So that cash is tied up somewhere else. So this is really the importance. Hopefully you guys get this. I mean, I hope you get a lot out of today and you really learn a lot about the incurred cost proposal and how to prepare it. But if you walk away with this understanding of the underbilling and the overbilling and what the problems are for you and what we're trying to do with the incurred cost proposal, for me, that's a win today in today's webinar. With that, Jenny, another polling question, please.
This is our fourth polling question today. In Schedule G, it is the reconciliation of blank to Schedule H, A, GL, B, cost ledger, C, B&P costs, or D, none of the above. And Robert, while everyone's answering that, we did have a question come in. What does B&P and IRAD stand for?
All right, so B&P is bids and proposals. And again, this is the pen to paper of preparing a proposal or preparing a response to an RFP. B&P is not marketing, it is not business development, it is not trade shows. It is the actual, we are putting together our proposal in response to an RFP or a request for proposal. IRAD is internal research and development. This is you as a company saying, we're trying to advance our technology, we're trying to come up with a new product or a new service, you know, we're advancing our software, whatever it is that you make. This is not paid R&D, right? So if a customer comes to you, whether it's the government or commercial, and they're paying you to develop something, then that's a direct cost. IRAD is, hey, internally, we got an idea and we're going to see if we can make it happen.
Great, thank you. I'm going to go ahead and close out this poll.
All right, so we've got answers kind of all over the board, a little tricky here. Remember that Schedule H, I'll kind of talk about it this way. Remember that Schedule H really is your cost ledger. So B is not the right answer. B Bravo is not the correct answer because we would use our cost ledger or cost status reports or whatever they are, job cost reports, to fill out Schedule H. It's not C, and so really by default, what it takes us back to is the general ledger. Remember, G is the reconciliation of my general ledger to my job cost ledger. And in terms of the incurred cost proposal, my job cost ledger is Schedule H. All right, carrying on. Now we're going to talk about some supporting documents, and then I want to go through some tips and tricks for Excel. Again, get some questions in the Q&A. We'll have some time at the end of today's webinar to take some additional Q&A questions. All right, some of the supporting documents that you'll need. And I also want to keep in mind here, just a reminder, this is a two-part webinar on the incurred cost proposal. So the documents that I'm talking about today are going to be the ones necessary to complete the portions that we've talked about today. Next month, when we talk about some of the other schedules in the incurred cost proposal, I'll be talking about documents again, but it's going to be documents for that section. So you do need many more documents that are listed here today, but this is going to be your starting point. And today we talked about general ledger schedules, right? So it makes sense. I'm going to need my trial balance. Best if you can get it out of your system in CSV or Excel, right? Because then I can put it in this Excel workbook that I'm using. I can put the tab in there, or I can at least copy paste whatever your approach is. But you're going to want that trial balance in CSV or Excel. If you're working in QuickBooks, and I've got a couple of things for you to talk about with QuickBooks. One of the things that's frustrating with QuickBooks is that it doesn't give you an individual balance. It gives you a debit and a credit, and so you have to create your own, right, and do the math. Pretty simple, but remember that QuickBooks reports give you debit and credit. They don't give you a single line for trial balance. So just remember that. If you're on QuickBooks Desktop and you are a government contractor and you're going to have to do incurred cost proposals or otherwise do some other stuff, you want to be able to calculate your rates, you want to do job costing, there's an excellent tool called ICAT, I-C-A-T, just like it sounds, ICAT, that works with QuickBooks Desktop. Currently does not work with QuickBooks Online. They are building a version for QuickBooks Online. We're hoping they're going to have it available later this year. But it extracts data, it's live, it pulls the information straight from your QuickBooks. There's no synchronization, no uploading, downloading of files. You install it in the same place where your QuickBooks Desktop is installed. It reads the data straight out of QuickBooks, and it, again, will calculate your indirect rates. It does your job costing. It has a budgeting tool, and it also has an incurred cost tool. So you fill out some additional information for each of those jobs in the ICAT. It pulls the data from QuickBooks, and with the click of a couple of buttons, it populates a lot of this. Now, it's not going to populate everything for the incurred cost proposal, but it will populate a lot. So those of you that are on QuickBooks out there, if you don't know what ICAT is, please contact us, send us an email. Would love to do a demo with you. I can do a real short 15-minute demo, and honestly probably blow your mind, and you'll walk away definitely wanting to buy it. So contact us about that. Again, continuing on here though with supporting documents, job cost ledger. Again, however your system does it, hopefully you can get a single line by contract with a summary of the cost elements. Again, labor, material, travel, ODCs, and subcontractors. You'll also need, again, those invoiced amounts by contract. Remember that the invoiced amounts need to be inception to date. My job cost ledger is going to be for the current or for the fiscal year that I'm preparing, though I will need my prior incurred cost proposals to bring in all of my prior costs so that I can calculate an inception to date cost by contract. COVID-19 relief. Talked about this a little early on in today's presentation. Again, we did a whole presentation last month on PPP forgiveness and other stuff and how it affects the indirect rates. You're going to have several things. Whether you did PPP forgiveness, you're going to want to have your application and the documents that you use to support that. Because whatever costs that you put on and whatever time period you used for the PPP forgiveness are the same way you're going to have to apply those credits back in the incurred cost proposal. Just had a conversation with a client this morning, and they're, I think they're kind of upset about this now, and we think this, we know a lot of clients that ended up here. They applied for forgiveness, they put the dollars in there, and they didn't consider what the effect of that would be on their indirect rates. So our reminder to people, what we're telling people, if you have not yet applied for forgiveness from a PPP loan in 2020, or if you are considering a second draw loan or it could be a first draw loan in 2021, do the strategy around the forgiveness before you actually apply. We can help you with that, but you're essentially going to want an indirect rate calculator, and you're going to want to kind of play and say, how much direct labor do we want to use, or do we want to use indirect labor? Do we want to use overhead labor? How much rent do we want to include in here? Because all of those factors will have an impact on the resulting rates. And so there's a lot to consider. COVID-19 relief also includes the Section 3610 for government contractors. That's something unique for government contractors. The employee retention credit, the FFCRA paid sick leave. And the key reminder here, it's the key that you'll see in the webinar if you go back and watch it, no double dipping. So if you have dollars that you're using for PPP forgiveness for labor, you cannot use the same labor dollars for the ERC as an example. And with that, Jenny, another polling question, please.
Our next polling question, COVID-19 relief is an ICP supporting document. A, true, B, false. And Robert, while everyone is answering that, we did have another question that came in, and someone had asked if you would be able to provide completed examples of the schedules. In other words, schedules that are not blank.
I think I do. I don't have one handy, but I think I do have one that we plug some dummy data in. If you'll send me an email and we'll put all that contact information on the screen in a couple of moments, I'll look for that. Obviously, we've got stuff with client info and I can't share that, but I think we did create a dummy one with some data that I can send you.
I'm going to go ahead and close out that poll now.
And the answer here was true, right? So what we just talked about, if you've got COVID-19 relief of any kind, you're going to need all of that information in order to prepare the incurred cost proposal. All right, let's do some Excel tips and tricks. I've mentioned several times throughout today's presentation using different formulas and stuff. This is a complex workbook. If you've never opened it up before, there's like 22 tabs, can be more depending on what's going on in your organization. So it's really critical to make the workbook easy to use, easy to follow. You're going to be using it. Somebody else probably in your organization is going to be looking at it. Hopefully, and one of the things that we tell people, and I probably should have said this early on, obviously we hope you'll call us, but call somebody. You've got clients, for those of you that are CPA firms out there, right? People come to you to do their taxes because taxes are complex. I have to admit to you, I don't even do my own taxes. I'm a licensed CPA, but I don't practice tax. Tax is very complex, and so I hire somebody else to do, and actually we hire one of the bigger firms to do our taxes and to do my personal taxes because we're a multi-state organization. We've got multi-jurisdictional tax issues. It's a lot to track and follow. Hire a professional to do it. To me, the incurred cost proposal is much the same. There's a lot of schedules in here, a lot of forms. And if you don't get it right, guess what? The auditors are going to find the problems and they're going to come back. It's the same reason we hire somebody, right, to do our taxes, because there's a lot of schedules and forms. Somebody knows what they're doing. I'm hiring them. I'm trusting on them. And I also know they're going to have my back if I go through an audit. It's the same concept with us. We can be there to answer questions at the time you go through any kind of an audit. But the Excel tips and tricks can really help with that. So first one that, well, I'll say that, again, our indirect rate calculator, it's available on our website under the tools. It's the indirect rate calculator that you'll see in these next several slides where I talk about some of the tips and tricks here. So named ranges, and I've also got links in here to all the stuff with Office, Microsoft Office, so you can read in there if you want additional information. But named ranges are awesome. You can name individual cells or groups of cells. And then what you can do is makes it easier to write the formulas because you can refer back to a logical name. So otherwise I refer to it as you're playing Excel bingo, right? So how many of you, and we've all done it, right? You're looking at somebody else's workbook or even your own workbook, and you've got something that says reference this other tab, and it's cell AZ219, right? So what are we doing? We're going back and we're scrolling, and it's all this back and forth trying to figure it out. And then, and then sometimes we even get lost and we go back. It's just crazy. Named ranges, if I know, for example, that a number over here represents total direct labor, then guess what? I call that cell total direct labor because I know in my other calculations, I need to refer to total direct labor. And then the nice thing is when I'm building out a formula somewhere else, or I otherwise need to pull that number over and show it again somewhere else, one, I can do a calculation once in one place and always refer back. So that's one of my big things. It's really critical to me, and that's one of the things that you'll find a problem in the DCAA template, is that they will actually have you recalculate rates and numbers multiple times. And guess what? Then there's an opportunity for error, and I don't like it. So do the calculation once, use a named range, always then refer back to that, right? I calculate all my direct labor, I know what it is, I call it that cell, then anywhere else I say equals direct labor. Boom, very simple. It also then makes it easy if you're reviewing anybody's work, right? So if you do it and you have us review the work, or if you hire us and you're going through and reviewing our work to make sure you understand it, you'll look in the formula, as you'll see here on the screen in a moment. It's easy to validate. So in this case, this cell down here is called company. And you'll know that by the upper left-hand corner. So where the red box is, that's where you name the cell. And now I know that anywhere else that I want that company information, I simply refer to that. Tables are very important. Easy tool to use. We use them a lot. If you didn't recognize them on the Incurred Cost Proposal template, if you download it, you'll see the tables in there. If you download the indirect rate calculator, you'll see the tables in there. It's really nice because tables give you built-in structured referencing. That means that when you create a table, it recognizes the headers and the rows. It does automatic subtotals and totals in there. And so I can say, you know, go to this table and bring me this information. Boom, very simple and easy to do. We use tables. The other thing is you can rename the table. By default, it's going to call it table 1, table 2, table 3. But all you got to do is go to the table design tab in Excel. As you see that I've got in the upper right-hand corner, then you'll see the table name and you can overwrite that and call it what you want. In this case, this is coming from the direct tab for our calculation, so I called it the direct table, right? Very simple and easy to do. Polling question for us, please, Jenny.
This is our 6th polling question today. It's easier to write formulas when you reference A, blank, A, numbered cell, B, logical name, C, retyped number, or D, none of the above.
I'm going to go through a couple of these polling questions quickly because we do have one more after this, and I want to make sure we get through the material and we have some time to answer questions. We'll give you guys a couple of seconds. Yeah.
I'll close it out right now.
And the answer here is B, logical name, right? That's what I was just saying, right? If you're trying to remember, hey, where did I put direct labor? Was it, you know, AZ 219 or was it AB something? All right, don't have to worry about it. It's just called direct labor. Use a logical name. And in fact, again, when you go through our stuff, you'll see that I have a whole structure in how I do it. So if I'm working in overhead, anything that's related to overhead's got an OH. Right, so I've got an overhead pool, overhead base, I've got overhead rate, I've got overhead labor, I've got overhead expenses. I use that same nomenclature all throughout. So it's very, and then the other nice thing about that, when you use the same kind of nomenclature, when you're building, you can start to type and then it'll pull up all of those, right? If I start all of my overhead things with OH, and I know that I'm building a formula with something in overhead, as soon as I type OH, then all of my OH named ranges come up and it's easy for me to pick the one that I want to use. All right, carrying on, we were talking about tables. Tables can also automatically be assigned a name. That name can be customized. Tables, again, automatically recognizes the column titles as data headers. So it's easy to build those into your formulas. And then they can also, you can reference individual cell or individual data rows or totals. Here's an example of what a formula looks like with a table reference. So we use a sum if, and we also use some sum ifs throughout. But I've got a sum if formula here. This says go to the direct table, look at the type column. When the type column, when that row is labor, then I want you to summarize the amount in the direct table amount column. Right, so when we're doing sum ifs, we're saying, look in this column, right, and find something that matches and then summarize this column. That's all I'm doing here, but I'm using a table with named ranges. So I'm saying, go to the direct table, find the column that says type. If there's a type that says labor, then summarize that and bring it back. And so again, so when I look at this, it's very easy for me to know what's happening in this formula. XLOOKUP, great tool. This is one of those I wish I could have you guys raise a hand and say how many people are using this. Relatively new. Microsoft introduced it in 2019, I believe. I think it was early 2019 as a beta kind of thing. They finally rolled it out last year. It is available only in newer versions of Excel. If you're using Office 365, it'll be there. If for some reason you're still on like, a downloaded Office 2010 kind of thing, it's not going to work. But if you're on Office 365, it should work for you. XLOOKUP is new. It essentially replaces VLOOKUP and HLOOKUP, though those functionalities are still in there. Those of you, some of you know the problems with VLOOKUP and HLOOKUP. Many of us through the years built index and match, which was kind of a nice fix. Still kind of had its own issues. Also, index match formulas are a little more difficult to build. The nice thing is that XLOOKUP formula is really simple and very straightforward. Your VLOOKUP and HLOOKUP depend heavily on the order of the columns and rows. So it depends on where the column is in relation to another column. But it also depends from a row perspective. Things have to be sorted appropriately, because otherwise it finds an answer and it stops, but it might not be the right answer. Okay, that's where XLOOKUP can help. XLOOKUP works great with named ranges and tables. Give you an example here. I've got an XLOOKUP. This is actually from the incurred cost proposal. Remember I told you that we have to bring in prior year information as part of this? So our little trick is we put a little table over to the side with the prior year information, and then I use XLOOKUP to go over there, find the information from an identifier from the current year, such as a contract number or an account number, look in the prior year's table and pull the number over for me. That's what this formula here is doing. It's saying XLOOKUP, look at A10, which is the account number, go to this table over here and find an amount that matches that account number from the prior year. Some if or some ifs, you've seen that already. Hopefully some of you are already using it. It's a great way with the table. So again, when you see the way we've got stuff set up, we have you identify which pool it is and what is it, a labor, is it an expense, is it material? And then because of those categorizations that you can use, it's easy for me to build that sum if and pull that information over. And again, the example here that we saw earlier, sum if, look at that direct table, find the type of line that says labor and bring back the amount and summarize that information for me. I already mentioned you using a data entry or a trial balance tab in the incurred cost proposal. Great way to put the information in one place. Use formulas, eliminate any kind of copy paste stuff. XLOOKUP works great with that, and then you can use that again to populate other tabs throughout the workbook. And then lastly is color-coded cells. You'll notice that when you go through our stuff, we've got color-coded cells. We do that a lot to identify where you can enter data or where there are links or formulas that we don't want you to mess with the information in those cells. With that, Jenny, I believe this is our last polling question, and then we can do our Q&A.
This is, we'd like to see where you're at now. Post-presentation, what is your knowledge level? A, I'm still very confused, help. B, I have a better understanding but could use clarification. C, I understand but would prefer assistance. Or D, I'm an expert and don't need assistance. Give everybody just a few seconds to answer that, and we can move into some Q&A. Remember, if you have any questions you'd like Robert to answer, please drop them into the questions panel. It's on the right-hand side. I'm going to go ahead and close this out.
And obviously there's no right or wrong answer. We have people, I guess we did get a couple experts out of this at the end, which is nice. But generally it looks like we had a lot of people move up. We have only a couple of people that are still confused. So then we must have done something well today. I'm going to put our contact info on the screen as Jenny gets ready to ask me some Q&A questions. Again, our website, leftbrainpro.com, a lot of tools out there. If you got questions about what we covered today, questions about PPP forgiveness, things like that, send us an email, support@leftbrainpro.com. That goes into our help desk, and so many people, many eyes seeing that, and we typically respond to those within one business day. So send us your questions there. All right, Jenny, some Q&A, please.
So one question that came in earlier, we received PPP loan funds in 2020. The forgiveness was approved in 2021. What year do we adjust our overhead, 2020 or 2021?
So if you actually received forgiveness and you're finalizing and calculating your rates for 2020, I would put those into your 2020 rates, right? So so right now, and I'm going to assume that you're a calendar year taxpayer. You've got an incurred cost proposal that's due June 30th, right? It's due 6 months after the close of your fiscal year. Since you already know you've got forgiveness and you know where those dollars go, put those into your 2020 rates.
Okay, our next question, where can I get the Excel sample?
Again, the tools that we have are all on our website. It's leftbrainpro.com. When you go there, you'll see tools as one of the menu buttons in the top menu across the top. When you click on tools, it'll actually open up. We've got multiple tools out there, including the indirect rate calculator and the incurred cost template.
Great. I don't see any more questions coming in at the moment. I think we've completed the Q&A part of the session. Before we close out today, I'd like to say thank you to Robert of Left Brain Professionals for such an informative webinar. And just a reminder, you can download the handouts from the GoToWebinar control panel and also from your Incorsa dashboard. And you'll be able to access your CPE certificate from the Incorsa dashboard 1 hour after the program concludes. Also, a survey will pop up when the GoToWebinar control panel is closed. We always read your feedback and take it into consideration. Thank you again for joining us today. Join us for part 2 of detailed preparation of the incurred cost proposal, other schedules, special issues, and templates hosted by Robert Jones on Tuesday, April 20th. You can register via the Incorsa page. Have a great afternoon, and thank you everyone for joining us.